Hello traders, this is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Tuesday, March the 18th, 2008. The headlines out of Switzerland this morning read, "Dollar stands still at record low prices ahead of FOMC decision." It remains to be seen whether the Federal Reserve's attempt to increase liquidity in the market will have any effect on investor sentiment. The market awaits the FOMC rate decision, which will be announced at approximately 2:15 Eastern Time this afternoon, which is now broadly expected to be a 100 basis point cut, revised from 75 basis points. The dollar has been relatively stable within the past 24 hours. The euro dollar is currently trading around 157.74, down from its 159.04 high early on Monday morning. The British pound continues to lag behind the euro in performance, as investors still fear that the UK credit market can still turn for the worse in light of what has occurred in the USA. The British pound dropped approximately 3% against the euro last week. The euro pound trades now at approximately 78.56, down slightly from 79.12, the Monday high. News is coming in at a breathtaking pace on the second day after the Bear Stearns demise. It will take a while for the market to fully digest the concept of the fifth largest U.S. bank disappearing over the last weekend. Risk aversion will stay elevated for a while. The dollar was slightly weaker in the Asian session as the markets await the Fed's rate decision this afternoon at 2:15. The Fed's unorthodox approach to monetary policy has created a very anxious environment. The dollar-yen was range-bound around the 97 level, while the euro-dollar was able to reverse the Asian low and trended upwards to 157.93. The carry trade, which took a beating yesterday, also fell into a tight range, with the Aussie yen bouncing between 89 and 90 level. In Japan, politicians continue to squabble over acceptable candidates to replace Governor Fukui, which could leave the Bank of Japan without a leader in a critical period with growing global financial crisis and a potentially disruptive strong yen. In response to Muto's rejection, the government has proposed Koji Tanami, current governor of the Japan Bank for International Cooperation, as a replacement. Even if Tanami accepts, the BOJ is likely to be fragmented and unorganized for a while, which is going to send through the market lower anticipations for any change in monetary policy. The markets will temporarily focus on the UK's CPI report. This figure is likely to rise as gas and electricity prices increase. In addition, the producer output price inflation is expected to come in at an elevated level, creating a clear hazard that core goods inflation might start to move higher again unless retailers are willing to compress their margins. Given yesterday's massive pound sell-off, there is considerable concern that the UK will follow the US down. The primary factor which is supporting the currency is the MPC's focus on inflation over growth concerns. Should inflation pressures lessen, which is very unlikely, emphasis will be shifting to fighting slower growth. But given our outlook for the UK CPI report, we believe inflation should give the pound short-term support. With the unprecedented move by the Fed over the weekend, we are in line with market consensus into now pricing a 100 basis point cut in the fund rate to 2% today. The downward adjustment to the discount rate over the weekend underlines both the gravity of the financial crisis and the Fed's resolve to pull out all the stops to prevent the situation from spiraling out of control. Perhaps the most disturbing aspect of the emergency move was that the Fed felt it couldn't wait 48 hours when the market reaction might have been more positive than skeptical. The panicked move lends itself to speculation that the Fed knows something the market doesn't, maybe about rumors regarding Lehman. Clearly, the recent rash of weak economic data, such as the fall in payroll and retail sales, as well as today's industrial production figures, point to a recession, which warrants an aggressive action by the Feds. The market will be particularly interested in the accompanying comment to clarify the justification for the Fed's unorthodox approach to its monetary policy. That concludes our news for today, with a reminder that Friday starts Easter weekend and it is a holiday. Most of the major markets will be closed on Friday, so there will be no news. We would like to thank you for viewing, and we hope that this information that we provide is helping you with your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com, where you can find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. And also, we have a link to our Yahoo forum, which is also called Succeed in Forex. We hope you will visit us there soon. So until tomorrow, have a great trading day and happy pipping.